Good afternoon. This is Ken Long from Tortoise Capital with a collection of assorted trades and charts, or what I would call a day in the life of the chat room, June 3rd, 2013. There's my contact information. First of all, shout out to the powerful force for good that is the Leavenworth United Soccer Club U14G Thunder, league champions, Patriot Cup champions. The future's in good hands with kids like that. All right, so this is a chart uploaded by one of our members. He's taken a look at um, some theoretical work by Larry Connors, which says that after a 3-day up move that is pulled significantly away from the 5-period moving average in the yellow line here, these are all daily charts in symbol Tesla, there's a probability that it moves back towards the 5-day moving average. And so he was prepared to trade that on this day here, which turned out to be a great big red candle. Notice the 3 days powerful up move away from the trend. This is a 220 period Bollinger Band with plus or minus 2. Huge volume move up. So after 3 days, he's thinking, well, it may revert to the mean. So he puts a regression line crossover framework on it, and this makes the point that I'm trying to make all the time, and that is that the RLCO framework supports many different kinds of trading decisions and gives you a consistent, disciplined, systematic way to interpret price action in terms of normal and abnormal over your preferred time period. So now he's dialed down to 3-minute charts. Tesla closed here at the yellow horizontal line, then huge gap up to 97, started selling off, and now he's got a 10-period regression line in the orange and a white period, or a white 30-period regression line here in a white. Regression line crossover occurs outside of the river, which is plus or minus 1 standard deviation on a 30-period Bollinger Band. That's play number 1. So he goes short here. He holds that position all day, exits down here 30 minutes before the close. If he's got a $1 stop, that would be right about here. A $2 stop would be above the high of the day, the ribbon high of the day, which is a 2-period Bollinger Band. So if he's got a $1 stop, which was relatively easy to manage, he's got about a 6R. If he uses a $2 stop, it's a 3R, and cash overnight. Perfectly played, well executed, using the RLCO framework to find out how far does it have to move back towards the main to be significant. He pulls the trigger here. This is the volume weighted average price for the whole day. When it fails through the close, in other words, it closes the gap here, that's an opportunity to start looking to get short again. So you could actually play this in one leg and then 2 legs. And there's actually a counter trend rally here from 82 to 87 on a 50-cent stop. That's a very tradable move intraday on 3-minute charts, because we've got a regression line crossover here outside the river. Buy when price enters the river, stop below the swing low. That's play number 1. We're hoping for the far side of the river, it blasts right through there. On this retracement, your exit, there's another 2 or 3R intraday, certainly feasible. All using regression line crossover framework for interpreting action. Intraday today, on the 3rd of June, what we had was market opening here. There was a gap down, and then an opportunity to ride this little wave. Here's an RLCO, buying, selling, waiting. It fails outside the river. We get a reversal. This is our standard reversal entry right here. A low, a higher low, takes out the high of that candle, buying here. Or as late as the price entering the river, it gets to the far side of the river and beyond into the floodplain, starts failing, so we exit here, sells off even further. We get the same re-entry here, price entering the river with the stop here. This one blasts through the Bollinger Band mean, blasts through the river, blasts through the floodplain. You see the horns of the dragon forming here, exit in our standard way right here. Sells off to the 30-period regression line, finds support at the edge of the river, starts taking off. We re-enter here, and it goes on, and we get a low-risk idea, multiple R's in symbol TNA right there. The next trade that happens is this one, finding support at the edge of the river. Enter with a 20-cent stop, This is UVXY. So we're buying it at 650 with a 20-cent stop here at the Bollinger Band mean. It takes off, finds support at the edge of the river, takes off again by a second position at 6.70 with a 20-cent stop. It moves to 6.90 where we take the exit for 3R. In UVXY, that's the volatility play, which we've been alerted to because of the risk-off indicator on the daily report. This is an example of us looking to work together to improve trading performance. The trader had made entry 1 here, like he's supposed to, when price enters the river with a tight stop. He exits here at this little swing low. He waits for price to exit the river before he re-enters. He gets out on this big red candle, and he sees what are some things that we could look at. I have no quarrel at all with pulling 0.6R out of this trade. Some things to look at. Trade number 2 or play number 2 in the RLCO is successful trade. Find support north of the southern edge of the river. In other words, find support of the Bollinger Band mean. A possibility of re-entering here, that's play number 2 in the RLCO strategy. And now you get this nice 3-bar move up just in time to add a second position for his 0.4R. And now what we have is probably a 2R exit right here. And then he can play that re-entry right here again because it found support north of the edge of the river. You can re-enter this. Probably gets a fractional win. Maybe he scratches if he gets out here. But really potential for re-entry at play number 4 and play number 2. Play number 2 is support of the Bollinger Band mean. Play number 4 is successful trade in hand, find support north of the river, and a continuation re-entry. So by sharing these insights in real time in the chat room, we have hope of doing some collaboration to improve our trading practice. Here's another one from the chat room today. He's dissatisfied. He only pulled 1.8R out of this one. This is the VXX. Makes the trade on price exiting the river after support above the Bollinger Band mean. Cash is here, finds support at the north edge of the river, enters again, makes a reasonable exit here. He didn't miss that much, 1.8R. This was a brilliant re-entry right here. I love it. Finally, just to make the rest of us feel sick at our stomach, Heather pulls in 17R, yes, 17R in 4 trades using 10-minute candles in the RLCO. This one's on the VIX, going from 1957 to 20.4 in a matter of about an hour with a relatively tight stop. She finds low-risk ideas on momentum, leaving the river, and can play a tight stop and quickly get to no lose. This one is 7R in TZA, the inverse triple Russell. Basically the same kind of pattern. Entering here, tight stop, finding an exit here. That red doji's the alert. Second red candle of weakness with a lower high. That's exit criteria. 7R. Same general idea in SPXU for 2.8R and then 2.9R in QID, the double inverse technology. Same basic pattern. So there's 17R using 10-minute candles and the regression line crossover. Way to go, Heather. And then finally, we just take a look at the daily market health check to start framing our concept of what's available for tomorrow over the weekend. We talked about this being a very important inflection point with finding support at the midpoint of the river, at the bottom of the RAF regression channel after a big sell-off day. This is still just market noise for market participants, and so this could be an opportunity to buy on a dip. What we had was finding support at yesterday's low and generally an up day on buying pressure. Still plenty of room to go for tactical trading up to 168. Support at 164. Just had a vote in favor today, and then support at 162 with the bottom line, no kidding, drop dead support at 158 has to hold for this bull market to continue on this next leg. So we're in tactical trading until we see a close above the purple line at 169. Defined support in the market at 164, 162. I'm still bullish based on today's price action. Had an opportunity to fail today. It did not. Volatility declined. And so this is still a buy on dip opportunity as we see on Williams percent R. On the ADX, we're still strong bull trend at plus 30 with bulls in charge. Although this has been a weakening condition, this is still buy on dip opportunity until proven otherwise. To prove otherwise would take a fail through these two supports, and then big fail if it gets through 158. So that's Ken Long for Tortoise Capital with your 10-minute market look. And good hunting. Keep your powder dry and your risk measured.